Today we're looking at Novo Nordisk, currently ranked as the 7th biggest company in the general drug manufacturers industry. They are reporting earnings in 4 days' time, so now it's a good time to look at their financials to see if they are a good buy in case of any pullbacks and the numbers they release are still in line with our expectations. So first let's just quickly talk about what Novo Nordisk actually does. So they are one of the leading producers of insulin and other diabetes treatments, including well-known drugs like Ozempic. They are also developing medications for weight management such as Wegovy, and they are also expanding into other therapeutics areas such as hemophilia, growth disorders, hormone replacement therapies, and other serious chronic conditions. They are definitely a company that invests heavily in the research and development of new medicines and delivery systems, with an aim of improving and preventing or even curing some of these chronic diseases. In short, Novo Nordisk focuses on creating and developing innovative medicines and health solutions to improve long-term health for people with serious chronologic conditions around the world. So now let's look at their financials to see how well they are performing. Let's start with revenue, and as we can see, everything is green, which is a very rare occurrence to see. So Novo Nordisk is actually growing its revenue 10% on annual basis from 2010 onwards. And in the past 5 years, it's actually growing over 20% per year. For gross profit margins, we can also see they are expanding and they're hitting around 85% in the last years, while in the past they were still high at around 80%. Net income margins, it is the same story, they are expanding and they hit a record of 36% in 2023, and the same applies to EBITDA and cash flow, which with EBITDA hitting its highest numbers in 2024, while cash flow from operation in terms of percentage of the revenue hit the highest number in 2023. Now, one important metric is comparing EBITDA to cash flow from operations, and on average cash flow from operation is around 86% lower than EBITDA. And if we look at our graph, we can see that they are mostly growing at the same pace in the same direction, which is exactly what we want to see. Here we don't want to see EBITDA outpacing cash from operations, as that might point to some financial mismanagement and potentially can raise a red flag. So here we have all greens. Now CapEx, here it is actually a big spike in 2024. As compared to 2023 number, we can see that CapEx nearly doubled. And also in the near future, Novo Nordisk is projecting even higher CapEx, which will definitely hit the free cash flow they generate. And free cash flow is basically just calculated as taking cash flow from operation and subtracting out CapEx. And what we can see here, because of this quite big jump in CapEx, as a result, free cash flow as a percentage of revenue fell substantially and is actually in line with what we were observing in early 2010s. But this is expected as Novo Nordisk is pushing and building a lot of new facilities to meet demand for their drugs. Now for shares outstanding, we also have all the greens here, which is something we want to see. On average, they are reducing their shares outstanding at almost 2% annually. And dividends are actually growing at nearly 14% per year. And the dividend payout is now actually closing up to 50%. Now if we look now at dividends per share, they are growing roughly at 16% per year, and this is expected as they are reducing shares outstanding, and we are pairing this with dividend increases each year. So now let's look at our projections and analyst projections to see how much this company is actually worth today. First, what we'll look at is residual cash flow from primary business, and this actually look at profitability if we strip away everything but its main business and actually looks at what is left for the owners of the company. So to do that, we have to take net income, depreciation and amortization and deferred income taxes, and we sum everything together. And from this number we subtract out capex and common and preferred dividends. And what we get is cash from primary business. And what we can see in 2022 and 2024, it's negative. which is not exactly something we want to see. But we know this is not a red flag because of massive expansion Novo Nordisk is doing and putting a lot of money into capex and also into acquisitions, which they are not taken into account here, but we know they are expanding, so this is not a red flag as they are growing their business. Now if you look at free cash flow on the other hand, with this formula it is a little bit different than the one above, but it is positive. Now what this free cash flow actually points to, it's actually its dividend ratio. It is not well covered. So basically currently we are at 0.73 for the dividend ratio, which means that it's funded by debt or cash they have in their bank account, as the dividends are bigger than the free cash flow they are generating. So maybe if they will need a lot of money going forward and they will still have a very huge capex, maybe we could see a dividend slowdown or even a cut. And also remember, Novo Nordisk is a Danish company, so maybe take this into account as well. Now if we look at how much this company is now actually worth with these numbers, we come up $4. But don't be mistaken here, this is not the price we are setting as a buy price for this company. This is basically just how much the company is worth to an owner. And it's so low just because of massive expansion this company is doing. While with free cash flow it is at $24. This is a little bit more reasonable, but still it is heavily impacted by the growth and capex. So let's move on to our projections to see actually how much we should actually pay for this company. Now for revenue, I decided to put 5, 7 and 9% as our baseline to go forward 3 years into the future. Now why such a low numbers? Simply because in the past company grew at 10% and now it is actually growing at 21%. But I have my doubts if this is sustainable in the future, especially with all the competition that is coming into the market. And analysts are expecting for 2025 they will hit 48.8 billion. And with red here we have highlighted everything that we are above analyst estimates. So analysts are expecting somewhere between 7 to 8% annual growth rate if their numbers hold true. Okay, moving on to net income, here I put 31 to 35% as a net profit margin. Our average is very much in line for the long-term average, which is sitting at around 32.5%. It is a little bit on the higher end, but as we saw, the company was expanding its margins. I'm still conservative, but this is something I want to do so that I get companies that are priced on the lower end. And again, we are overestimating for a few years over analyst estimate. Now moving on to EBITDA, I put in 43, 46 and 49%, with 46 being the long-term average over the past years, and here we are overestimating only on few occasions. The next up is cash flow from operations, and here we are just basically taking our EBITDA numbers and multiplying with our 86%, which is how closely cash flow from operations is related to EBITDA. And here what we can see, we are actually overestimating almost on every front. So here we definitely need to be cautious going onwards, as from cash flow from operations we are calculating our free cash flow. For capex we put negative 15% as it is taking up quite big chunks of revenue, and for 2025 I actually manually changed this number to $10 billion as Novo Nordisk guided that they will be expanding their manufacturing site substantially. So that's why I bump up this number to over 15%. And here we are actually overestimating in comparison to analysts. This is definitely not a thing to worry about, as we are overestimating for cash flow, so it is better that we overestimate capex as well. Now moving on to free cash flow, analysts are estimating that Novo Nordisk will hit $8.1 billion in 2025, while we are estimating anywhere from 6.3 to all the way to 9.3. Now from here we calculate our terminal value, which will be our basis for perpetual growth rate valuation model. But before we do that, we have to discount all of this cash flow generation into today's money. To do that, we got here free cash flow discounted back to today, and we do the same for analysts' numbers. So now from these numbers we can calculate our first valuation, which is perpetual growth rate valuation. And to do that, we sum up every column, so numbers for 2025 to 2027 in addition to terminal value, and we get our present value, or how much the company is worth today. What is good to account here is also for debt and cash, and as they have a little bit more debt than cash, its present value will actually drop just a little bit. Now if we put this into per share stock price, our model is predicting that Novo Nordisk, with the numbers we have put in above, is worth anywhere from $32 on the lower side all the way to almost $45 on the higher end, with analysts' numbers coming in at $41. Now moving on to our second valuation model, which is EBITDA model. Here we have two different EBITDA multiples we need to take into account. So one is for company and one is for the industry average. If you are interested why I have always two different multiples, you can check out this video about mistakes early investors make that I link below in the video description. But to basically get our EBITDA multiples, we simply take our EBITDA numbers for 2027, which we calculated earlier, and multiply it with its given EBITDA multiple, which gets us these numbers over here. We of course need to discount them back to today to get our present value, and if we divide with the shares outstanding, we get the stock price, which for company average ranges from anywhere from $67 all the way to $86, and for the industry average it ranges anywhere from $60 all the way to almost $78, with analyst numbers coming in at $82 and $73. For our next step, what we do is simply average perpetual growth rate and EBITDA multiple to get our company average range and to get our industry average range. So if you believe that company will grow at only 5% going forward next 3 years and all the margins would be at the lower end, then the company is worth around $45. Now, if you believe the company's revenue will grow at 9% going forward and company will hit all the highest margins we set, then the company is worth around $59. And the same applies for the industry average, which is, let's say, just $3 lower, so from $41 or $42 all the way to $55. And with the analyst numbers, with the same process, we predict that the company should be worth anywhere between $55 and $51. So definitely this company does tick a lot of boxes, but we do have a few, let's say, reddish flags. And the biggest one is actually they are expanding substantially their manufacturing facilities, and if for any reason they are not able to sell their drugs or competition that is coming up for all the drugs they are making, then definitely the stock might take a hit if they are unable to meet those expectations, and especially as they are investing each year more money into this facility. So I believe Novo Nordisk can grow its revenue for the next 3 years at 7% easily. And that's why with 10% margin of safety I applied for these numbers over here, and with 10% discount factor for our formulas, I believe these average numbers over here are a good fit to purchase a stock somewhere in this range. I already own a couple of shares of Novo Nordisk with the average price of $53, so that's why I am putting a buy price currently at $50. So please tell me in the comments below, what do you think about Novo Nordisk? At which price do you believe this stock should be a buy? Should we avoid it? Let me know in the comments below, and I'll see you in the next video. Bye bye.